Hello traders, it's your boy, the inspiration guy, back again with another interesting video for you awesome people. Do not forget to hit the subscription button, like the video, comment, and also share to your fellow traders. Now, today I'm going to talk about trading this week. Unfortunately, I was not on the markets for that long, but I felt it will help some of you to just analyze the setups that were in this trading week, simply backtesting. And I'm also going to show you the one trade which I took. Going into this week, my weekly buyout was bullish. And why am I saying that? This is because I can see price going up and I can also see price breaking structure to the upside. I can also see price disrespecting bearish PDRAs and respecting bullish PDRAs. The market is also expanding to the upside and I was anticipating price to go to this external range liquidity up here because price was recently going up and I'm targeting this external range liquidity as my drawn liquidity. Going into this week, there was a PDRA right here. Price had formed an order block and I was anticipating price to return to this order block, and that is when I will take my buys. And in order for this order block to be touched, I also anticipated price sweeping the low of the previous week and giving me a CRT. I drew my weekly CRT low and my weekly CRT high and also drew my equilibrium level. Then I went to the lower time frames so that I could make an entry and target my first take profit at the equilibrium and the second take profit at the previous week high or the weekly CRT high, then my last target at the external range liquidity. But my drawn liquidity during this week was the weekly CRT high or the previous week high. So the weekly time frame was my analysis time frame. Now I went to the 4-hour time frame to look for confirmations or entry. Before going to the 4-hour time frame, I went to the daily time frame and then I saw price touch this fair value gap here, this bullish fair value gap, and I anticipated price to go higher after touching this fair value gap because there was a weekly order block here and price is respecting weekly bullish PDRA. So I anticipated price to touch this fair value gap and go up. About weekly manipulation profiles, I anticipated the low of the week to form on either Tuesday or Wednesday. As you can see, this is the Wednesday candle which formed the low of the week and price immediately started to go higher. So there was this CRT here. I was expecting price to break this Tuesday high and form the low of the week on Wednesday, and that is what it exactly did. I plotted this daily CRT high and daily CRT low here, and then after doing that, I immediately went to the 1-hour time frame for my entries. Now in the 1-hour time frame, price gave me a CSD entry here, and unfortunately I was not in the market. Then it gave me another entry from here. I was still not yet in the market. This is also a CISD or an order block. Now this is where I entered the market from the red line indicating the buying price. And then my first target was this green line here. I was targeting this green line here, but my first target should be the 0.5 level. As you can see, I took my trades in the Thursday candle, meaning that a larger chunk of the week had already been played out. So I was targeting the 0.5 level because I was sure that the market, before the market closes on Friday, the market would have touched this 0.5 level, but it will unlikely touch the previous week high because the larger part of the price action during this week had already been played during Monday, Tuesday, and Wednesday. So that is how I traded the GBP JPY. On the right side of the screen, you can see the setup which I took in the GBP JPY during this week. And that was the only setup which I managed to scoop out of the markets because unfortunately, I did not have enough time to access the market. Going into Nasdaq, the only things that helped me analyze this market were the weekly profiles, the PDRAs, and the best trading strategy and orange theory as always. My bias in the NAS was bullish because price is going higher and also breaking structure to the upside. There were a couple of PDRAs here, so I waited for the weekly manipulation profile, that is, price forming the low of the week on Wednesday. The Monday candle formed, the Tuesday candle formed, but it did not touch this fair value gap here. Now I anticipated for price to sweep the liquidity at the Tuesday low and give me a candle range theory setup. Okay, so I drew my daily CRT low here and my daily CRT high here because I was anticipating price to form the low of the week on Wednesday, and because it touched this fair value gap and my bias was bullish, I was anticipating that price will continue going higher and tap this external range liquidity. Now let's go to the 1 hour time frame for our entries. Before going into the 1 hour time frame, I visited the 4 hour time frame and saw that price had tapped our daily fair value gap but had also formed a 4 hour CRT. As you can see, we have this range here, the 4 hour CRT high and the 4 hour CRT low. So this was the accumulation candle. This candle here was the manipulation candle. It swept the 4 hour CRT lows liquidity, then started to go higher. After analyzing our setup in the 4 hour time frame, we head to the 15 minute for our entries. In the 15 minute, we can see we have this CISD here, and price came and broke this CISD here, and there was no retracement, but sometimes we take entries from the candle that broke the CISD and set our stop loss at the bottom of the manipulation candle, and the first target being the zero point 0.5 level, that is the equilibrium of the CRT, the second target being the high of the 4 hours candle range theory, and the third take profit being the external range liquidity up there. Now that was the setup in the NAS 100. Thank you for watching this video. Don't forget to hit that subscribe button, like, comment, and share to your fellow traders. Thank you and God bless you.